Good day, everyone. I am Jasmine Claire Itabuno. Together with me is Miss Evelyn Bantilan, and we are going to tackle about Chapter 15 entitled Monetary Policy and Bank Regulation. In the first page, or in the first PowerPoint presentation, we have here the word central bank. We have here the word central bank. Central bank is the organization responsible for conducting monetary policy and ensuring that a nation's financial system operates smoothly. So in the US, ang tawag nila is the Federal Reserve or the Fed, but in the Philippines, we call it the BSP or the Bangko Sentral ng Pilipinas, run by a board of governors. Kanang board of governors is mo na mahala sa Bangko Sentral ng Pilipinas or the Federal Reserve. It is also appointed by the elected president in which country. So central bank is designed to perform three important functions. Number one is to conduct monetary policy to promote stability of the financial system. And number three is to provide banking service to commercial banks and other depository institutions and to provide banking services to the federal government. So since it's a bank, ana mabutang ang mga financial or mga kwarta sa usaka lungsod, usaka or even in general sa usaka country. So there is a so-called bank regulation. Bank regulation is intended to maintain bank solvency by avoiding excessive risk. So for example, excessive risk kanang mabankrupt or makawatan or magansi sila tungod sa ilang mga gipangbuhat nga pasud or pagawa sa kwarta. So regulation falls into a number of categories, which is reserve requirements, capital requirements, and also restriction on the types of investment banks may make. Regulation requires the bank to maintain a minimum net worth. So, several government agencies monitor banks' balance sheets to make sure they have positive net worth and are not taking too high a level of risk. So, what I have said nga, base ka nang mabankrupt or kanang magansi sila sa ilang mga gipagawas nga kwarta kay inig pabalik is like murag hapon or wala may tubo, and since ang bangko is naman jud na sila interest, so if ingan na magansi sila or it is a level of risk. So na so-called bank run. So ang bank run is when depositors race to the bank to withdraw their deposits for fear that otherwise they could be lost or this can create instability in the banking system. So, ang purpose sa mga tao is like, musud sila o kwarta sa bank para na interest nga motubo or bisag pila pa naka-porsyento. Pero ang bank run is like, for example, na kanang outbreak or news nga kani nga bangko is kanang possible nga mabankrupt sa mga tao. Ikaw nga nibutang kag kwarta na bangkuha is imo jud ang kuhaon. So, kintahay og nagpautang ang bangko og 50k ana nga tawo, unya ang tag-iya original nga tag-iya ng 50k is iyang kuhaon, so magansi ang bangko. And to prevent such, ang bank regulation, it is the deposit insurance and lender of last resort. So deposit insurance is, it makes sure that depositors in a bank do not lose money. So kay ilang i-secure kay intay katong bangka ng kwarta, so para ang mga ning deposit is dili sila makuhaan og kwarta tungod adto. And lender of last resort is an institution that provides short-term emergency loans in condition of financial crisis. Monetary policy involves managing interest rates and credit conditions, which influences the level of economic activity. Most common is US is the open market operations, which the central bank selling or buying treasury bonds to influence the quantity of money and the level of interest rates. So, how open markets operation increase the money supply. So, na diri sa kanang na picture nga which shows that the Happy Bank starts with 460 million in assets. So, kung ni siya kanang wala na nagibutangan og zero, pero kaning 40, 120 ug 300 is in millions tani mo ni assets. So divided siya among reserves, bonds and loans, and 400 in liabilities in the form of deposits with a net worth of 60 million. Requirement. So the percentage of each bank's deposit that is legally required to hold either cash in their vault or on deposit with the central bank. So mapasabot ani is when you have a greater reserve requirement, less money na available to lend out, since either man nga gipa-require ka nga pag imong kwarta is naa nimo or naa sa vault or naa kwarta sa bangko. And smaller reserve requirement means that greater amount of money is available to lend out. Have discount rate. So when we say the word discount, is like makuhaan ng presyo. So discount rate in the monetary policy or bank regulation is it is the interest rate charged by the central bank on the loans that it gives to other commercial banks. So commercial bank is like Kintahay BSP. So ang commercial bank is BDO, kanang mga bangko nga kanang nanay mga names, or like adto na butang ang kwarta niya kadto nga mga bangko is adto ra gihapon ang kwarta padung sa BSP. So if the central bank raises discount rate, then commercial banks will reduce their borrowing reserves. If central banks lower the discount rate, it charges to banks the process in reverse. What is quantitative easing? It is the purchase of a long-term government and private mortgage-backed securities by central bank to make credit available in hopes of stimulating aggregate demand. And expansionary monetary policy or loose monetary policy, natalk na ni siya sa previous nga chapter. So I will just give a brief or kanang recall. So expansionary is a monetary policy that increases the supply of money and the quantity of loans, while contractionary monetary policy, it is the monetary policy that reduces the supply of money and loans. So sa monetary policy, it should be counter-cyclical. So when we say counter-cyclical, or moving the opposite direction of the business cycle of economic downturn and upswings. And banks are legally required to hold a minimum level of reserves, but no rule prohibits them from holding additional excessive reserves. So, unsa kahanang excess reserves? So, it is a reserve bank hold that exceed the legally mandated limit. So, since pwede man sila mo increase, so naay excessive reserve. Kato nga mga kintay, ang legal limit ra is 50k. So, ug mo mulapas og mga ng another 500 bisag 500 na siya, ning lapas naman na siya sa limit. So ang tawag ana is excess reserves. And the velocity, so it is the speed which money circulates through the economy.
So hello everyone, so today full for monetary policy. So basic quantity equation of money supply, its velocity, nominal GDP. Mao ni ang pagdami ng pira or means pagdaghag kwarta. So, recall that nominal GDP first level or X real GDP mao ni ang pagtaas sa ilang production or minggamay na ba or insakto na ba. So, therefore, money supply or velocity first level ang real GDP mao ni ang bilis ng pag-ikot ng pera or dali ra gipadagan ng ilang kwarta. So, ang real GDP mao ni ang tinuod nga production nila. So, means and central bankers believe that the primary task of monetary policy should be fighting inflation, since the 19th they have a targeting. So, inflation targeting, a role that the central bank is required to focus in keeping inflation low. So, inflation targeting is a money policy strategy where a central bank set an explicit target of inflation rate, usually expressed target for inflation rate usually expressed a percentage increase that consumer price index CPI, and then consumer price index adjust monetary tools like interest rates to achieve that target over a specific time frame. Example of countries that inflation targeting include the United Kingdom like Canada, New Zealand, or Sweden.